time to spotlight portfolio positioning, and for that, we welcome in a special guest. Shana Sissel's with us, founder and president of Banyan Capital Management. Thank you for being here in New York.
I'm excited to be here in person.
Yeah, I'm very excited you're here. So, tell me a little bit. I sensed a little bit of caution. I know you have some tech on the list, but where do you stand here on this Tuesday morning?
So it's interesting because I think I'm less committed to the idea that we're going to have a full-blown recession.
Right.
I don't think it's because the Fed has done a particularly good job in their decision making, but I do think it's because the Fed has been late in their decision making. So not being aggressive enough has actually allowed the economy to continue to thrive in terms of employment, and the consumer seems to be doing okay. So I think that overall, there is a better chance than I thought 6 months ago that we'll have a soft landing. So I'm sort of positioning for volatility, as I think the Fed is actually going to get more aggressive in the next meeting. They've sort of indicated as such. But I don't think we're going to have a full-blown recession. So I'm a little more aggressive in my positioning with a hedge on, just to take advantage of some of the volatility that I expect.
Yeah, and so, I mean, we're certainly getting this vibe that it's going to be higher for longer. Are you thinking 25 or even 50 in the next?
There have been some indications that 50 is on the table now.
Right.
It wasn't before, but the really strong jobs report and the resilience of the consumer has really left the Fed with no other option, because inflation continues to be sticky and high. And you're starting to see that impact on a variety of different things. And the consumer numbers that just came out today, Home Depot and Walmart both put out caution, saying that they were concerned about the consumer. I think that is going to make the Fed more aggressive, because they really want to get inflation under control. That's really their focus. And the employment market's been gangbusters, and so they can't kind of fall back on that as a reason not to be aggressive.
Right, we have a gangbusters employment market, very tight labor market. To your point, Home Depot and Walmart see people pinching the purse strings, as I say. You know, they're being more cautious on what they're spending on. And even the housing print that we got, and while it was slower, you still see high home prices. They talked about home prices edging higher. So that's another thing. I mean, we thought at least one area came down, but look, it's going right back up. So let's get to your positioning. You have the defensive optimism positioning. Tell me a little bit about the group and the portfolio there on that side.
So every time I come on, I always talk about the same thing. My defensive positioning is really those liquid alts, those ETFs that are hedged, like BTAL and MRSK and FMF. Those are really liquid alternative hedge fund-like strategies. I also have some mutual funds in there that are also hedged, a global macro fund by AQR, as well as a alternative credit arbitrage fund that is Franklin Brandywine. So it's really just about taking advantage of what I think will be volatility in the market. These products will do well if there's volatility in the market, and so I'm positioning that way. Now, MRSK is a little more equity forward, and that's sort of reflecting the fact that I don't think we're going to have a deep recession, and so I want to have a little more equity beta in the portfolio. So that's kind of how you can kind of see that in my position.
So this is the defensive side of the game. And then the tech weakness, which some could be concerned, especially since we've had the recent run-up in the growth stocks, and now people are wondering, you know, what now? In the meantime, you may still think there's opportunity there. You have names on there like NVDA and Apple, and you had LDOS. That was one that you liked last time. You liked this one for some time, right, Leidos?
Leidos is one of my favorites. It's trading at a multiple below the market multiple, about 14. Strong dividend, and has strong, steady business in that government contracting space, mostly security related. I know I say this all the time, but you'll see Leidos everywhere when you go to the airport, because they handle all of the security screening. But that's kind of their base business, and they have a rapidly growing healthcare business that I think is a real catalyst for the stock going forward. I think it's a good, solid foundation for my portfolio so that I can take some risk with those tech names. I like NVIDIA. I've been following it my whole career, so I always tend to add to it when there's some weakness in it.
And reporting on Wednesday.
Yes.
That's tomorrow. What would you do? Any moves ahead of earnings or after earnings?
Not ahead of earnings. Depending on what they report, I might be a buyer on weakness.
I I see. Okay, so maybe a buyer on weakness. What about Apple, which is around 149 today? What do you think? It came up from 124, so it's had a decent run recently.
So I was a buyer under 135.
Nice.
Right now I'm kind of a hold. I like the stock. I'm not selling it. If it came down again under that 135 number, I'd be a buyer again.
You'd be buying more. Yeah. Last but not least, JetBlue. This is a name you often stick to also. Tell me a little bit about why this one is the standout.
So it's actually somewhat of a newer name. I think it's in the last month that I've started to put a position on in JetBlue. I've followed the stock for a while. I'm a JetBlue fan personally. I like the airline. I like flying the airline.
I like the television.
Yeah, I grew up in Boston and they flew everywhere, so it was easy. I don't get to fly them as much now in Chicago, but I do think they are strong customer service focused, competitive pricing, and they were trading almost near their IPO price. And they IPO'd in 2001, I believe, 2002, and their split adjusted price was about $6, and it was in the 7s. So I was a buyer at that point, and the stock has done well since then.
Yeah, it's been running up from $6 to now it's over $8.
Yes.
And so that's the big picture on that. What's the final? I mean, you're going to be waiting for a GDP print. We'll get sentiment. We'll get more in housing. We'll get the Fed minutes tomorrow. What's your final takeaway here? You're saying, the recession, there was talk that the recession, even if we were to have one, would be mild and short-lived. Are you more in that camp rather than the deeper recession, right?
Yes, I'm more in that camp. I still think we're going to see a recession.
Yeah.
I don't see how we avoid one. The Fed is going to be aggressive, going to keep rates higher for longer. You're seeing the consumer kind of pull in their spending, and that's going to cause the economy to shrink. But I think it's really hard to have a deep recession without the job market having weakness, and we're just not seeing that.
Yeah, not now, or not yet, not really. So we have to wait and see. It's good to see you. Thank you for being here. Wonderful to have you on the show. Shana Sissel's with us, founder and president of Van Ryn Capital Management.